Good morning friends. I hope you remember our previous video on annual statutory compliance for NGOs and must have found it useful. I know you must be waiting to know the other annual compliances that an NGO might be required to comply with. I am Ashish Agarwal from team NGOenabler and taking forward our previous video where we discussed solely about annual income tax compliances that a charitable organization should keep in mind. Today, we shall discuss on compliances under FCRA and other statutory acts as might be applicable. Be with us till the last, even today, so that you don't miss upon any compliances which might land you in trouble. So first, let's move on to FCRA compliances. I am covering only the important and the most relevant ones usually required. There can be other compliances under FCRA as well. In fact, you can go through our video on do's and don'ts under FCRA post amendment, which will give you a fair idea of the entire FCRA regulations in short. First and foremost under FCRA compliances is filing of FCRA annual return in form FC4. All FCRA registered organizations, I repeat, all FCRA registered organizations need to file FCRA return every year mandatorily, irrespective of whether any contribution is received or not. This implies even if no contribution is received, nil return has to be filed mandatorily. The return needs to be filed within 9 months from the end of the financial year, which implies on or before 31st December. If you want to know how to fill the FCRA annual return, you can check out our video on the topic by clicking on the I button on the screen. Next, under FCRA is filing of Form FC6D for intimating and taking approval of the MHA department regarding any additional utilization account opened by the organization. Remember, though the word intimation has been used before the form, unless the approval certificate is received, no transactions should be done through that account. In fact, the bankers nowadays do not make it operative unless they receive the approval from the MHA department. Then comes filing of Form FC6E, which is required to be filed in case of change in original key members. So basically, if there is any change from the list of the members which were reported in the last renewal or at the time of first registration, whichever is latest, I repeat, if there is any change from the list of the members which were reported in the last renewal or at the time of the first registration, whichever is latest, such intimation has to be given to the MHA department by filing Form FC6E. Practically, we have seen the approval gets delayed, but in our opinion, since it's just an intimation, approval as such should not be required from the MHA department. Next is filing of Form FC3C, that is the form for renewing your FCRA registration. So, if the expiry of your FCRA registration certificate is falling during the financial year, you need to file Form FC3C for renewing your FCRA registration within 6 months of such expiry. If you want to know how to file Form FC3C, click the I button on the screen for checking out our video. There are many other forms such as Form FC1, FC2, FC6A, FC6B, FC7 that might be required to be filed as and when applicable to the organization. Moving on to the compliances under other statutory acts as might be applicable, first is filing of annual returns to the Society Office, Trust Office or the Office of Charity Commissioners. Every year, an annual return along with the specified documents are required to be submitted by the charitable organizations depending on the state act prevailing in their state of registration. For instance, in West Bengal, the charitable societies need to file Form 6 along with the activity report, the list of current governing body members and the audited financials to the Office of Registrar of Societies. However, the trusts are not required to submit any such returns in West Bengal. On the contrary, the organizations registered in Maharashtra need to submit annual returns to the Office of Charity Commissioners, whether a trust or a society, because both are governed by the Maharashtra Public Trust Act 1950. Next comes professional tax compliance, deduction, deposit and filing. Professional Tax Act again is a state act, and each state have different slabs of salary for deducting the professional tax from employee. Mostly, each organization is required to be registered under the Professional Tax Act because even NGO is an establishment and falls within the purview. An annual enrollment fee and monthly deduction of professional tax from employee is required to be paid by the employer within the due date prescribed under the relevant state act. The organizations also need to file the professional tax return annually within the dates prescribed under their respective state acts. We have already dealt with a few of these acts, namely the West Bengal State Tax on Professions, Trades, Callings and Employments Act 1979, the Nagaland State Tax on Professions, Trades, Callings and Employments Act 1968, the Jharkhand Tax on Professions, Trades, Callings and Employments Act 2011. And you can see on the screen different slab rates are there in each state. Even the due dates for filing annual return differs state wise. Then comes compliance of Provident Fund, deduction, deposit and filing. Check whether your organization falls under the purview of Provident Fund Act, that is, you are employing more than 20 employees whose salary as defined under the Act is less than rupees 15,000. If yes, you need to meet the monthly compliance of deducting the PF from the salary of employees at the rates prescribed under the relevant Act and deposit the same within 15th of the next month. As of now, the prescribed rate of Provident Fund is 12%. There is an apprehension that Provident Fund is not applicable to the NGOs, but let me tell you, the relevant circular which exempted NGOs from the applicability of Provident Fund was valid up to 31st March 2015 and no extension, I repeat, no extension has been provided. In fact, a specifically wide notification dated 7th September 2015, this applicability was confirmed. So now even NGOs fall under the purview of Provident Fund if they fulfill the eligibility criteria. The return is filed along with the challan, which is to be submitted by 15th of the next month, along with the employer contribution and the administrative charges. Then comes compliance of employee state insurance, deduction, deposit and filing. Check whether the organization falls under the purview of Employee State Insurance Act, and if yes, you need to meet the monthly compliance of deducting the ESI from the salary of the employees at the rates prescribed under the relevant Act and deposit the same within 15th of the next month. There is an apprehension that ESI is not applicable to the NGOs, but let me tell you, only in certain states such as the Northeast states have been exempted from ESI, that too in certain non-notified areas of those states and not completely. So now even NGOs fall under the purview of ESI if they fulfill the eligibility criteria. The return is usually filed with the challan itself, which is to be submitted by 15th of the next month along with the employer contribution and the administrative charges. At last is the compliance under the Companies Act 2013, which is applicable to Section 8 companies and not societies or trusts. Under the Companies Act, a charitable entity needs to file annually Form AOC 4, that is the form for filing financial statement and other document with the Registrar of Companies, and MGT 7, that is the form for filing annual return for the companies. The due date for filing such forms is within 30 and 60 days from the date of annual general meeting respectively, which means AOC 4 has to be filed within 30 days of the last AGM, and the MGT 7 has to be filed within 60 days of the last AGM, whenever it is held. Apart from AOC 4 and MGT 7, DIR 3 form needs to be filed for each director who has been allotted with the Director Identification Number for completing his or her KYC as on 31st March of the financial year. This is required to be filed on or before 30th September of the immediately next financial year. So this is it for today. Hope you must have found this video quite useful and interesting. For more such updates, keep tuned to our channel. Don't forget to subscribe it and put your notifications on. You can also follow us on Twitter, Instagram, Facebook and LinkedIn. For any clarifications, you can get back to us through mail or comment below. Thank you.